and starting precisely on time. I know there's probably going to be a lot of people who are wrapping up their trading day, so I'd like to thank everyone for joining us this afternoon to talk a little bit about the DeMark Indicators. As Allison said, my name is Stephen Quimby. I work with Tom DeMark out in Scottsdale, Arizona as the head of sales. And what we're going to do today is give a bit of an overview of what DeMark is all about, what market timing with the DeMark Indicators is all about, and how you can do that on the CQG platform with the DeMark service for CQG. So we're going to be, focusing kind of on the top level overview. Please, if you do have questions, by all means, we're going to try to have a good section of time to go through some charts and some questions at the end of the call, so just go ahead and get those into the Q&A. Also, if you're an experienced DeMark user, just kind of be aware that we are going to cover some of the fundamentals here before we get into sort of the questions, the application, the setup, if you will, on your CQG platform. So if you are an experienced user, keep that in mind as we kind of look through starting here. So without any further ado, I'm going to kick it off, and we're going to talk about market timing with the DeMark Indicators using the DeMark service for CQG. As a quick proviso, by compliance team has us put this in front of every webinar, seminar, presentation we give. This is for educational purposes only. So we're not making any recommendations. We're not, analyzing specific products with buy or sell or, particular marketing of products or strategies. We're purely talking about providing educational information about the DeMark indicators and how they're used by traders in their own trading process to help them refine their market timing and their trade timing decisions. So this is, educational purposes only. So without any further ado, what is market timing? What is DeMark all about? So what I'm looking at here, this is a crude oil chart, WTI. And the reason that we really look to things like the DeMark indicators, to tools to help with market timing, is because this market, I would say is very clearly trending higher, right? So this was through the first, half of 2018. Price of crude, after sort of putting in a low early in the year, moved up from, call it the 56 area all the way up into the 70s. And this was evidently, if we just used a simple trend line, if we used traditional technical tools, a market that was trending higher. So Tom DeMark always says that the trend is your friend unless the trend is about to end. So the DeMark indicators are designed to tell us when is that trend maybe about to end. When is the trend potentially at or approaching exhaustion? When in Tom's mind would the trend be depleted to a point where it might be vulnerable to a reversal in the market? So from a moment of timing, when might we be able to time an anticipatory decision to take advantage of this trend? So if we're saying that this was an upward trend, this is the TD sequential or TD combo indicator, indicating that this trend was coming to an end. That as of May, maybe this rally in crude that had taken us up into the low 70s was running out of steam. And you can see over the course of the end of May and into the start of June, the market sold off. And so that's what we're trying to do with the DeMark indicators, is we're trying to provide objective market timing tools that help us anticipate these changes in trend, anticipate these changes in direction, rather than be reacting to them. So our agenda today, we're going to take a brief introduction to DeMark. We're going to talk about who is Tom DeMark? Where did these indicators come from? What are the concepts that we're looking at with the tools? We're going to talk briefly about TD sequential and TD combo, which are the two DeMark studies that are probably the cornerstones, the ones that, if you know about Tom DeMark, you probably know about sequential and combo. Then we're going to dive into the CQG platform to look at actually applying TD sequential and TD combo using CQG charts. We're going to look through a few chart examples, a few markets. We're going to talk about different ways you can integrate the DeMark studies with the DeMark service for Bloomberg into your CQG workflow, be that through the M-scans or through alerts or through formulas. We're going to talk about that. And then at the end, we're going to go through questions and live charts. So like I say, if you have any questions, pop them in the Q&A. We'll get to them at the end. So let's plow through so that we can get there to the charts sooner rather than later. So briefly speaking, the DeMark indicators are the body of research. They're the life's work of Tom DeMark. These are tools that Tom's been developing for over 45 years now. They're tools that have been being applied in the markets, from the 1970s to today across equity markets, futures markets, fixed income markets, currency markets, you name it, there's probably someone out there using the DeMark indicators in that market. So Tom's designed these indicators over the course of his career, and he's worked with a litany of different investment professionals, of different institutions, different hedge funds. Notably, Tom was for a stint the executive vice president at Tudor, working with Paul Tudor Jones, and since then Tom's been a special advisor to Steve Cohen at Point72, and that's a role where this slide's a little bit out of date. He's recently rolled over 20 years working with Steve. So Tom's done consulting. He's provided the tools, the training to some of the largest trading groups within the world, here in the U.S. and abroad. So the indicators themselves, fundamentally the core concepts were developed in the 1970s and remain really the same today. So over the course of Tom's career, he's developed more than 100 indicators. You'll find more than 70 of them within the DeMark service for CQG. And some of those core indicators and ideas are the same today as they would have been in the 70s, in the 80s, when you had these sort of classic traders using them. So the basic idea behind all of Tom's indicators is that long-term trends may be determined by fundamentals. However, short-term price action is determined by supply and demand in the market. So what we're trying to measure then here is that supply and demand. So that's to say that when there are more buyers, when there's more buying pressure in the market, that's establishing a potentially a bullish trend because price will advance on that imbalance in buying. Similarly, if there are more sellers, you're likely to see price decline. Now, however, Tom's key insight into this buying and selling pressure is that markets don't necessarily top because of smart news. Markets don't top because of sellers coming into the market. Markets don't top because of the fundamentals. The market tops when the last buyer is bought, or alternatively, the market bottoms when the last seller has sold. So that's this concept of what Tom calls price trend exhaustion. The idea that when the buying pressure that's pushed the trend higher is exhausted, when there are no more buyers left to buy, that's when that trend is vulnerable. That's when that trend is potentially exhausted, and we might look to see a change in trend in the market. So like we looked at on that crude chart to start the presentation, the DeMark indicators are designed to identify that point where maybe the trend is about to end. If the trend has been your friend, if there's been a run-up in the market, if there's been buying pressure in place, when that buying pressure is exhausted, if the trend is about to end, the DeMark indicators are telling us that's a spot where we might be able to position or time accordingly. So the DeMark tools, TD sequential and TD combo are the ones we're going to focus on today, but other tools like TD propulsion, TD D-Wave, the TD retracements are all about identifying these moments of potential price trend exhaustion so that traders can better time their entry and exit decisions, to be anticipatory rather than reactionary, and to anticipate change in trend rather than purely respond. So at the top level, let's talk about sequential and combo. So there's a lot of moving parts here, and this is a little bit technical, so bear with me, but we'll try to move through it pretty quickly. If you have more detailed questions about sequential and combo, by all means, I would suggest reaching out to me after the call, and I'd be happy to talk through more of the really nitty-gritty of the mechanics. So sequential and combo both start with the TD setup. So the setup phase is consistent across both indicators. That's to say it's the same with sequential and with combo. And that's because the setup is the initial component that identifies the underlying trend. So the setup identifies the direction of the market. So if we're looking to establish potential trend exhaustion, first we have to establish that there is in fact a trend in place. So the setup is a very mechanical process. All of Tom's indicators are purely mechanical and purely objective. So what we look for with the setup is we compare the close to the close 4 bars prior. So it's always comparing the close of T0 to the close of T minus 4. So the setup starts first with a price flip. So the price flip occurs, and if I flip back a slide here, the price flip occurs when we go from having a setup count in one direction, where the close is lower, in this case, than the close 4 bars prior, to a change in direction where the setup is above the bar, above the count, with a close higher than the close 4 bars prior. So the setup then continues as long as we have consecutive bars with closes exceeding the close 4 bars prior in the same direction. So if we look at this example here, this 1 is here because our close is higher than the close 4 bars prior. On that same rolling 4-bar look back, our 2 is higher than the close 4 bars prior. Subsequently, the 3 is well higher than the close 4 bars prior. So the setup has to occur on 9 consecutive uninterrupted bars. So if we have 9 closes higher than the close 4 bars prior, this is the completion of what we call a sell setup. It's indicative of an upward trend. 9 closes lower than the close 4 bars prior is indicative of what we call a buy setup. It's essentially a downward trend. So at the end of each setup, we look for a condition we call setup perfection. And the setup perfection occurs when we have extension at the end of the move, defined in the case of a sell setup as a high of bar 8 or 9 exceeding the highs of both bars 6 and 7. So this setup perfection captures this extension at the end of the move and is going to be marked with a red arrow in the case of a perfected sell setup, or a green arrow in the case of a perfected buy setup. And after that setup is perfected, we're expecting a short-term price reaction potentially in the next 1 to 4 bars. So you can think of this, we have the initial setup establishing the trend, the initial sort of thrust of the move, and when that's perfected at the end of the move, we look to see a short pullback or consolidation on the trend. So after the setup is complete, after we look for the perfection, we also establish with that 9 what we call the TDST or TD setup trend level. If you're an experienced DeMark on CQG user, note that the TDST is carved out as a separate indicator because some people look at TDSTs exclusive of the counts, or some people would look at the counts excluding TDSTs. But the TD setup trend is drawn from the start of a given setup in terms of price. So in this case, we're looking at the lowest true low of this completed sell setup. And the TDST is drawn to establish where that trend began so that we can identify on a potential retracement of the move where we might look to see support or resistance. So dotted red, this is our TDST from the highest true high, level of potential resistance. Our dotted green, a level of potential support. So once the setup is complete, then we're eligible to move into the countdown. So if the setup is the trend identification phase of the indicator, the countdown for both sequential and combo is the trend exhaustion phase. It's the depletion of that trend. So with sequential, the setup begins on or after bar 9 of, or excuse me, the countdown begins on or after bar 9 of the setup. So the countdown within sequential is looking to measure days of strength or depletion of the underlying trend. So we look to see days where the closing price is higher than the high 2 bars prior. So it's important to notice that with sequential, if we're looking at the countdown compared to the setup has to occur 9 consecutive uninterrupted bars. However, the countdown can have breaks between the bars and only occurs as we continue with qualifying bars. So once we have 13 qualifying countdown bars, we reach that red 13, and that's the completion of the countdown. So the completion of the countdown, as we said earlier, indicates a point where we're saying that the trend is potentially exhausted. The trend has been our friend, it's been in place, but the trend with this 13 in place is potentially coming to an end. So the 13 is going to occur at the end of the countdown. If it's above the bars, this is what we call a sell countdown 13. Were it to be counted below the bar, it would be a buy countdown 13. So the countdown with sequential can notably occur in both trending and trading range markets, which is important because that's a critical difference between sequential and combo. So when you hear people talk about the 9s and the 13s, so if you ever hear anybody talk about that, if you see DeMark research, you're always hearing people talk about sequential and combo. So both of these indicators begin with the same setup, but combo begins concurrent to the setup. So it can begin as soon as the first bar of the setup. And combo, having the same basic requirements as sequential, has subsequent additional rules that means that combo is silent in a trading range. So where sequential can count in a range-bound market, it can count in a flat market, a choppy market, combo is only going to count in a directional trending market because combo requires that the close of each purple combo bar exceed the close of the previous combo. So it requires continued extension of the trend throughout the move. Once we complete a 13, once we complete that sequential or combo 13, it's telling us that the trend is potentially at an end, so we also establish what we call the TD risk level. So the risk level is going to be drawn associated with a completed combo 13 to identify the potential residual momentum in the trend. So that's to say, when sequential prints a 13, when combo prints a 13, the risk level tells us price could continue as far as this level. The momentum of the trend could take us as far as that price, and we'd still be expecting to see potential exhaustion and a reversal in the market. But if price were to break beyond that risk, we would know, maybe that trend had more momentum than anticipated. Maybe we're more likely to see continuation. So in addition, with the 13 as a timing tool, we look to see the response to the 13 occur within this zone or area defined by the risk level. And in terms of time, we look to see that exhaustion occur within 12 bars. So that's to say after the 13, we look to see the market start to respond and pull back within the next 12 price bars. Okay, so that's the basic mechanics. That's the quick and dirty, get that out of the way. So I'm going to shift over here to look at a few live examples and look at sort of how the DeMark service actually works in practice in CQG. So bringing up my CQG screen here. So for users who work with DeMark on CQG, one of the first things that people need to be cognizant of is that the DeMark indicators can be applied across any time frame. So whether you're a short-term trader and you look at things like 5-minute charts, 60-minute charts, if you look at Fibonacci type intervals, 13 minutes, 34 minutes, something of that nature, the DeMark indicators can be applied regardless of time interval, because what we're looking at are Fibonacci-based patterns in supply and demand for price. And so whether we look at a daily chart, a weekly chart, or something intraday, it's all based on these same types of patterns and these same periods of response. So what I have set up here, for example, is I'm looking at a daily, a weekly, a 60-minute, and a 120-minute. So this is maybe a little bit sort of longer-term trading setup. So I'm looking kind of at the longer-term trends, the weeklies and the dailies, as well as looking at some of these 60-minute, 120-minute windows, which, looking at a future or looking at something in the FX space, maybe you have some of these longer swings across an extended trading session. So what we're looking at here is soybeans, and I've got here the TD sequential indicator. So if you're looking at applying the DeMark indicators on your CQG charts, you can build out the charts, and really one of the great benefits of CQG compared to other packages is that the CQG charts are basically infinitely customizable. So if I wanted to go ahead and add studies, I just come into add studies. If I come to this category of studies, if I'm enabled for the DeMark service, you'll see the DeMark list here. And this has the entire list of all of the DeMark indicators available on CQG. And you're going to see there's really quite a few tools available here. So if I want to take indicators that are amongst some of my most commonly used, I can just select the indicator. I can add that to the toolbar, and then I can build a set of the custom DeMark indicators I use most frequently over on this toolbar here on the left. So you can see on the toolbar here what I've got. I have a range of indicators. And what I have on this chart right now is TD sequential and the TDST levels. So if I was to look at my study list, I've got TD sequential and the TDST levels. So we can see with TD sequential, in this case, the default CQG white color package, we have a black pack available as well for people who prefer black charts, but the defaults here are in white. On the white background, our setups are marked in blue. Our sequential countdowns are marked in red. So the setup, as we said, identifies the formation of the trend. So if we look back, in this case, this is the daily soybeans chart. If we were to look back into the beginning of the year, we can see that there was an upward trend in place. And that upward trend ultimately first gave us a 13 printing here at the very beginning of March, and the market started to pull back. But we had a second countdown ongoing, and that second countdown ultimately reached this 13 here mid-April. And this was telling us that the upward move, the buying pressure, the buying trend was potentially exhausted. So as long as price remained below the associated risk level, which we'll see was marked here at 1,071, you'll see that it's drawn from the day, from the bar that we established at 13. This 13 above the bar is telling us as long as we remain below 1,071, we'd be looking to see this market start to pull back. We'd be looking to see a fundamental change in trend where this could change from an upward trend to a downward trend. So even though the market continued higher for another day and remained above the 13 for a few days, as long as we remain below this risk level, the idea, the concept is that that trend is potentially exhausted. So as long as we remain below that level, we're looking to see it start to pull off. And in fact, that's just what it did. And establishing a new setup here in April and subsequently reiterating that setup at the end of May into June tells us that the underlying direction of the trend had been established or had changed to the downside. So looking at this then, I can see where, again, we had our completed setup, triggered our related countdown, and that countdown ultimately went down to put in a 13 at the very beginning of July. So again, the countdown puts in the risk level, telling us that price could continue below this 13, but as long as we remain above this 797.4, we'd expect to see it start to rally. And in fact, even though it continued lower, we definitely did see it start to change trend here. So we can look, like I say, at sequential across any time frame. So if the daily chart here is capturing these swings that unfold over a matter of days to weeks, possibly a month or two, you can see on a weekly chart that this is measuring trends and responses that unfold over a little bit longer time. So we can see that the setup takes place over 9 weeks. The perfection of the setup pulls back over 1 to 4 bars. This is a short-term sort of counter-trend indication, snap back against the trend. So again, 1 to 4 weeks. So we're measuring this response weeks, possibly into months. You can see the entire process here in 2016 unfolded. It took about a year. It took almost the entire year to establish the trend, ultimately reach exhaustion towards the end of the year, and then start to trend lower. Similarly, if we were to set it up and customize with some shorter-term charts, a 60-minute chart or a 120-minute chart, the exact same concepts are in place on those shorter-term charts. So like I said, in terms of starting to customize it, so if we were to look at a shorter-term chart and we were to start to look, say I look at this 120-minute chart, I could add TD combo in addition to TD sequential, and we'll see, if I bring this chart to the fore, we'll see that combo in this case is going to be having the same setup, because as we said, the setup is consistent between sequential and combo. Then we have a countdown to 13, but again, as we said, combo begins concurrent to the setup. So many people, when they look at intraday charts, will look at an indicator like TD combo, because combo, identifying these directional moves, if there's a quick thrust in the market during the day or a quick thrust on a shorter term time horizon, combo can capture that by being sensitive to this movement during the setup and then requiring this directional trend following. So if you were to look at sequential and combo together, again, as I said, in CQG you can customize largely anything. So more or less everything you would see with the DeMark indicators has been parameterized. So if I come into my study settings, I can come into display for colors and say I wanted to make combos countdown, sort of this magenta color, because I wanted to make it easy to differentiate on my chart from sequential. And the last countdown, so the last countdown is going to be that 13, the completion of the count. I make that a sort of darker magenta. So then I can readily compare on my chart when I'm seeing exhaustion from sequential versus when I'm seeing exhaustion from combo. So I can quickly compare the difference between the two. So when I think about sequential versus combo, like I said, combo is going to show me this directional extension. We can see this 13 was captured at the low here, and then off of the rally on the 120-minute chart, similarly at the recent high at the very end of July into the start of August, again, we'd printed a combo 13. So frequently you're going to see combo applied on some of these intraday charts where you see sequential applied more frequently on some of the daily or potentially longer-term charts. Now, certainly, I know people who look at exclusively sequential. I know people who look at exclusively combo. But within the DeMark indicators, these are the two mainstays that you're going to hear people speak about the most. If you were to look across the range of DeMark studies, and you'll see, for instance, in my setup here, we have other tools, the TD propulsion indicator, which is a momentum breakout study designed to establish price projections or price targets. If I was to add that, we can see how this would help identify some of these short thrusts within the market to establish price projections associated with a given move off of a 9 or a 13. If I wanted to look at wave analysis, the TD wave is a tool that can allow me to establish the context of the underlying cycle or trend within the market. If I wanted to look at a short-term indicator, if I wanted to look at maybe something like the TD camouflage is a short-term tool that's really designed around being applied on a daily chart to establish an idea of maybe potential price action just within the next day's bar. So it's a very short-term indication. So really, as you think about how the DeMark indicators can fit into your trading, there's a wide range of different tools and different ways you can apply them. And if you look at the DeMark tools within CQG, we have educational materials. So if you come into your indicator studies and come over to the info window, you can see that the DeMark help pages on CQG provide reference about all of the DeMark tools. So as you're trying to figure out, which indicators might I be applying on my charts, if you have questions about the settings, the parameters, all of that information is made available here through the CQG DeMark help pages so that you have the tools you need to learn how the indicators work and then to learn how they might be applied within your particular trading. So in addition to looking purely at DeMark on charts, so if you work with DeMark on the CQG platform, we can see that I can apply any of the indicators. I can create my custom setup with multiple charts, multiple linked charts. So say I wanted to change this from, soy to corn. I can look at DeMark across all of my different time frames on one linked chart to quickly tell me, what would I see across daily, weekly, the intraday values as well. But also within CQG, I can do a lot of things in terms of establishing different conditions that I'm looking for. So I can use the CQG formula builder, and I can create conditions with DeMark. So say I wanted to create conditions for a sequential buy countdown 13. If I have the CQG formula builder open, I can quickly create a condition that I can then use to mark spots on my chart where something that I'm looking for is occurring. So say maybe I use combo predominantly, but I want to know just when sequential is marking that 13. I can go ahead, I can create my condition, come to conditions for marking bars, add that in here. I'm going to add a big green arrow. And so that's going to show me when sequential is hitting 13s. So the conditions here allow me to build something that could be very simple, like just looking for a 13, or it can allow me to build something quite complex. So I can get into establishing what I want to look for, what's going to be important to my trading from a timing perspective, be it the 9, the perfection, the 13, a test of a risk level, a test of a TDST. Maybe I want to look for sequential and combo together. Maybe I want to see sequential and combo when they occur within 5 bars of each other, or when they occur on the same bar. I can use the CQG condition tool to quickly specify and apply that on my chart as well. In addition to just using the DeMark indicators with conditions and on the charts, I can also integrate the DeMark indications with CQG's system of condition alerts, study alerts, or scans. So if I wanted to create, again, a scan here, so I wanted to look for the spiders, and I was going to go for my buy countdown 13. I can set this up in my preferences using bars, so a daily bar, and I can have it beep, or I could have it send me an email or display the chart when that alert triggers. So this is a really powerful tool because if you're using DeMark across multiple time frames, I know people who have traditionally maybe a quad. They have 4 different time frames set up, or people who have 5 time frames, or people who have multiple different screens just covered with DeMark charts. But if you have charts that you can't be looking at because maybe it's not your primary market, it's a related market, or maybe it's an indication that happens quite infrequently, you can use these alerts, these condition and study alerts, to specify what you want to look for and then to get alerts just on that. Same thing with the CQG market scan. So if you're enabled for the market scan, the great thing about using CQG with the DeMark service for CQG is that it's integrated down the line with all of CQG's analytics tools. So if you want to get into scans, be it intraday scans, daily scans, other scans, if you want to get into alerts, if you want to get into conditions, there's a wide range of things that you can do in that space with CQG and with the DeMark service for CQG. So, that's kind of the basic high-level overview here. So to look at just, a couple of examples, like I say, sequential and combo are the cornerstones. So when we look at a sequential chart or when we look at a combo chart, it's helping establish that sort of directional bias, that idea of when is the market trending, when is the trend coming to an end. So if I was to look at this weekly constant maturity continuation corn contract, bring this front and center, again, the critical decision points, the critical indications that we might set up within our formulas, things like 9s, perfection arrows, 13s, because we can see after the rally here on the 9, a short pullback, a perfection, and then another short pullback, ultimately going on to print the 13 in July, and then the market starts to roll over. So when we're seeing these 9s, these 13s, like I said, if we wanted to look at supplementary indicators, some of the ones that I have here on my list, for instance, the aggressive sequential and aggressive combo are variations of sequential and combo. The TD camouflage is a short-term indicator applied on daily charts to look for projections on the next day's bar. The TD Channel 1 is a commonly used tool. It's one of Tom's multiple constructions of the channel concept. There's a lot of differences in terms of how Tom looks at channels, oscillators, compared to maybe some of the traditional technical tools. So if you're interested in learning more, by all means reach out and we can get into some of the details on those, but I'm not going to go into great detail on sort of the mechanics of the channels. TD differential, another short-term one. So you can see if I wanted to build out a chart that is purely DeMark focused, I could add in something like a weekly propulsion level. So as I said with propulsion earlier, it's a common sort of complementary or supplemental indicator because propulsion identifies thrusts in the market to establish potential legs to a trend. So if the first move off of this low took us to our propulsion momentum level, the break of that momentum level that occurred here in early 2017 activated our propulsion exhaustion level, which established this projection here at 387.3. So we can see price took us pretty much right to that before ultimately recording a 13 in that area, telling us this could pull back. And then when we did pull back, you can see we came to our propulsion momentum downside, which is our first leg, and this is where we met some support. So we met support, tested and rallied, came back to record a 9. The 9 was perfected. So we perfected our 9 at support, which again is a timing indication, would tell us that this could be a spot where, maybe we'd look to see again that short-term rally. And in this case, this moved straight into a price flip. The other indicator I've put on this chart that's again another supplementary or sort of complementary indicator to sequential and combo is the TD moving average 1, which is a short-term moving average that many people look at to provide sort of a confirmation overlay. So the TD moving average 1 is marked in blue here with a moving average 1 low in the case of an upward trending move, or in terms of red with a downward trending move. So after I see a response to say a perfected setup or a 13, a break in the previous moving average and the establishment of a new moving average in the opposing direction is the sort of thing that many traders might look at as something that's a supplemental or complementary analysis in terms of how they integrate those sequential and combo counts into their thought process. So when you look at these tools, the way you fit them together, like I say, Tom's developed more than 70 indicators over his career. So these indicators can be short-term in nature. They can be longer term, they can be price projection focused, they can be about establishing confirmation or filters. So really the DeMark indicators are designed to provide you the tools that you need, the tools that can help refine your timing, provide an objective overlay to your process. But every person that I've talked to uses the indicators slightly differently. They have maybe a slightly different setup, anywhere between 2 to 5, maybe 10 indicators. Maybe they use different indicators on different time frames. So whether you look at just sequential, just combo, which are definitely the places to start if you're new to DeMark, or whether you were to look at more extensive indicators like a propulsion, a moving average, a camouflage, a differential, a TDD wave, those are all different tools that you could explore as you sort of delve further and become more comfortable with the core DeMark ideas. Okay, so I'm happy to look through charts, and obviously I have a couple in mind, but I want to make sure, since I know that people have started to ask a few questions in the chat there, is there anything that people want to ask about that we've covered so far that's not clear, or anything that we'd like to ask maybe as a question? So I see a couple things coming in. So I'm going to take this one first that's a little bit more mechanical. So when it comes to the alerts, and if you're not familiar with the alerts within CQG's package, CQG allows you to set up alerts, and these alerts run on particular symbols or particular issues or particular futures, particular stocks, whatever it might be. So you could set up as many CQG alerts as you would like. There is a limit in here, and you could talk to CQG if you feel like you need more than that, and maybe their support team can help you out. But that said, the alert does not run on a portfolio. So if I was to put the S&P in, if I was to put the Russell in, if I was to put a Nikkei or something with a huge number of tickers, the calculations required to run all of your DeMark indicator calculations, especially on complex conditions and studies across 500, 2,000, thousands of symbols, definitely gets to be a real strain on the system. So they're currently, as I don't believe, but you can certainly ask your CQG rep about this, it's currently set up so that you can run these alerts on a symbol-by-symbol basis. And you can run it across different time frames. If you did want to do a portfolio type approach, the portfolio approach is going to allow you to, if you have the CQG market scan enabled, you can start to run scans across portfolios and create your own portfolios that you want to scan within the context of the MScan. So if you're interested in doing things that are a little bit more focused on, wide portfolios, I'd suggest maybe looking at the MScan within CQG and, using DeMark within that context. If you have particular symbols, you certainly can build out a section of alerts as well. I know a lot of people who do it both ways. Okay, so this is actually a good question here, and it's a good difference. So I'm going to go ahead and look at this weekly chart and see if this can shed a little bit of light onto it. So, within the different DeMark tools, so the question here is about some of the variations within combo, within sequential. So if I was to look at combo and sequential, as I said earlier, Tom has parameterized all of the DeMark indicators for continuing research, for continuing development, so that if you as a user wanted to dive into, trying to really customize this so that it fits your process, or you find that there's a better setting, a better variation that is a better fit for sort of the time frame you look at or a particular market you look at. If we were to be doing that, you can parameterize all of this. So there are parameters to change if you wanted to change the periodicity, if you wanted to add qualifiers, if you wanted to change cancellation parameters. But there are also sort of some pre-built variations within the indicators. And sort of the two most commonly used would be the more aggressive variants. So the more aggressive variants are things like the TD aggressive sequential and the TD aggressive combo. So aggressive sequential and aggressive combo. So I'm going to go ahead and remove sequential from this chart. What they do is they change the conditions required to make a countdown to make it a somewhat more aggressive or a somewhat more liberal process to make that count. So if I wanted to, be having a really aggressive, or if I wanted to have sort of more indications rather than fewer indications, the aggressive variations of sequential and combo are going to potentially accelerate that countdown process to give us a 13 earlier than the standard or default versions might. So if I was to look, for instance, at that aggressive combo here, we can see in this sharp run-up where the aggressive combo gave us this 13. And if I was to compare that to the traditional combo is on here, and the traditional combo only made it to a 10. The more liberal conditions within the aggressive combo accelerated the process of getting to that 13, and that 13 proved to be quite timely. So some people find the aggressives to be a better fit for their trading. They would like to have more indications rather than fewer, and they're comfortable with the risk management and sort of managing their trades. So if you were to be looking at those aggressives, that's definitely, it's an interesting thing to explore. Some people also will look for, a clustering of different indications. So they might look for the aggressive variation to be approximately in sync with the standard, or they might find that the aggressive combo, and in sync with the standard traditional sequential. Or maybe they look at 13s across a range of different indicators. So that it's really up to you to explore as a trader in your own market which one fits your process best. But the aggressives are, it's one of the many ways in which the indicators are parameterized for ongoing research so that you can figure out what is the best fit for you in terms of your particular trading. Okay, so I'm going to check through here real quick, see how our questions are coming in. Okay, so I think the other thing, and this is a question that I know might have been mentioned briefly in the chat earlier. One thing that I would like to point out. So sometimes, and this is actually a common question, so don't feel bad for asking it. People frequently will ask if the DeMark indicators have a component with volume, or if Tom DeMark's analysis has a volume component. And the answer is that within all of the indicators on the DeMark service for CQG, you're going to see precisely one of them that has any volume component, the TD pressure, which has what we call a cumulative pressure reading, which has a volume component to the calculation. So, really Tom is a old school market timer and technician under the idea that really we're looking at price as measuring supply and demand. Price is speaking to us and telling us in terms of what we would look for. We don't necessarily look at volume. So not to say that you can't, and there aren't people who use DeMark very successfully, integrating it with a volume component, but really the standard DeMark indicators do not take volume into account. And other than TD pressure, if you were to look for volume in the DeMark toolkit, you're probably not going to find it. So I know that CQG definitely, when they told me they were setting up this webinar, they said they usually try to keep them pretty short. So I'm definitely happy to stay on and take questions and talk through a few more charts with people. I do want to mention, just for those of you who are interested in learning more, by all means, if you have questions, reach out to myself or my team here at DeMark. So you can reach me directly, squimby@demark.com. Feel free to give me an email or a call, or you're welcome to reach one of my colleagues on our sales team. Our number is right here. The DeMark service for CQG is a flat $500 a month. It's a month-to-month subscription, so there's not a long-term commitment with that. And as a subscriber to the DeMark service, you'll have access to some of our educational resources, both within the CQG terminal, as well as videos, webinars, training calls. We don't, at the end of the day, we can't teach you to trade, but we want to make sure from an educational perspective that we provide the educational tools that you need to start to learn the DeMark indicators and apply them yourself within your own trading. So, like I say, if you do have any questions, please reach out to me, reach out to one of my colleagues, reach out to my team, or you're certainly welcome to reach out to CQG and they can point us in your direction. Or if you want to get started with DeMark and give it a try, it's a quick and easy thing to add it to your CQG integrated client. So just reach out to your CQG rep and they handle the permissioning for all that. Okay, so have to get that out of the way so that everyone has the contact information. I'll flip this back at the very end before we call it a day. So in terms of other questions, I see we'd had one more kind of come in there, and if there's any last minute questions, get them in now because no CQG is going to wrap this up on me in a little bit. So there's a question about which markets do we see DeMark working better in? Does it work better in some markets rather than others? Practically speaking, we have subscribers to the DeMark indicators who trade almost everything. I know a gentleman, and a couple of guys actually in Europe, who trade emissions and baseload power. I know people in Asia, people in China who are trading the onshore Chinese metals markets and onshore China commodities markets. At the same time, obviously, we have extensive users trading some of the most liquid financial futures in the U.S., your ags, your bonds, your S&P, your euro dollars, people trading spot currencies. So there really isn't a particular market that we would suggest is more suitable for the DeMark indicators rather than another. We've looked at some examples today within the commodity space, but if we were to look, for instance, at names within the equity space, names within the index space, names within the currency space, the basic ideas are exactly the same. The basic models, the basic counts, the basic way we apply the analysis is going to be the same whether we look at a stock, whether we look at a future, whether we look at an index, whether, you name it. And it's really, important when you think of DeMark to think not in terms of which asset class or not in terms of necessarily which time frame is going to give me, which is the best time frame or the best asset class. It's maybe more important to think about it in terms of how does it match up with your trading. So if you're looking, for instance, at short-term intraday, in and out execution type trading, maybe you look at intervals like 3 minutes, 5 minutes, and the DeMark tools can provide an objective timing overlay to your trading, an objective timing component. So if you use sequential, you can use it, on the daily if you're somebody who's trading sort of the swings or trading around a position. You can look at things like a weekly if you're, in more of a long-term allocation or portfolio management role. So it's more important to make sure that you explore it in the markets that you trade, and you explore the time frames that make sense relative to how you trade, how you hold risk, kind of what your strategy is. So I'm guessing, based on the tenor of the questions, that maybe we have quite a few futures people in here today. So there was we looked at the beginning of the session at a crude oil chart. And one of the things, to remember as you think about different DeMark tools, remember that as you look at different intervals, especially within the futures markets, there, obviously you have to be aware of whether you're looking at a continuation contract or whether you're looking at something that is, a specific maturity. There's going to be differences. So one of the key things with everything DeMark is that it's all very precise. So with the DeMark indicators, we're looking at, really, if there's a penny, if there's a tick off from what's required to make a count, we're not going to get that count. If the setup has to occur on 9 consecutive bars, and we get 7 bars in, and the 8th bar is even to the bar 4 bars prior, that setup's going to be canceled. So it's all about having an objective, precise lens. And you want to make sure you know what you're looking at in terms of whether you're looking at continuation, specific maturities, specific data feeds. So just be aware of that, and your CQG rep can certainly help you with that. So if we were looking at this chart, the daily chart here, I think, is a really good illustration of the TD setup trend, or TDST levels. So the TDST levels here, as we said, they're established from where the setup began, so from the lowest true low of a completed sell setup or the highest true high of a completed buy setup. And these TDST levels identify zones of potential support or resistance on a retracement of the move. So this dotted red here is our TDST low, TDST level down. It's our zone of potential support. This dotted blue up here is our TDST high, TDST level up. It's our zone of potential resistance. So these TDST levels have defined, over the last 3-4 months of trading, a fairly clear range for this chart. So we can see the 65, 66, even though we broke below it, the line has remained a dashed line, which in DeMark terminology means it's disqualified. So as a disqualified level, that's a zone where we'd expect to see support or resistance. So even though the market traded below this TDST, the fact that this remained dashed meant that we might expect to see price rally back above it. We might expect to see, off of this low, price start to come back. Similarly, when we trade above this level of resistance, this TDST high, as long as this remains a dashed, a dotted, a disqualified line, we're expecting to potentially see the market pull back. So when we see indications like 9s, 13s, things occurring in tandem with these disqualified TDST breaks, that's where we're seeing potentially these turns. We're seeing that we traded below or tested the bottom of the range and started to rally. We put in the 13, indicating potential exhaustion, and flipped higher a few bars later and have continued the setup to start to rally. So the TDST, like I say, it's an important part. You can apply it separate. So if I wanted to look at the TDST's independence of sequential, I've sometimes seen people with charts set up to do just that. I can look at this, and this is showing me just the TDSTs. So the TDSTs, as I said, they're drawn from the beginning of a completed setup, and they're going to continue either until we qualify and confirm the break, which would turn them to a solid line, indicating the potential for continuation of the trend, or until we see a new TDST established in this same direction. So a new setup completes. A new setup in the same direction, which would essentially reset that level. So if I was to look, let's say I look back in time here a little bit, we can see where the first TDST was drawn back here, from the very beginning of the year in January. The new TDST began when that TDST terminates, because this TDST was canceled by the establishment of this new TDST with a new setup. Subsequently, the establishment of a new TDST, the completion of a new setup, again raised our support, raised our floor to this 65, 66 level. So the TDSTs, like I say, it's on a confirmed break, which would indicate that rejection of support or resistance, or on the establishment of a new TDST that's going to change that level. It's going to change, raise the floor, if you will, lower the ceiling, lower the resistance. Okay, so I'm going to wrap us up here in the next couple of minutes. I know CQG had us booked in for an hour, and they told me they usually do 45 minutes. Honestly, I could talk charts all day. So if you do want to learn more about specific indicators, if you do want to talk about, either some of the nitty-gritty of the mechanics, or if you want to go into some of the tools that we haven't had a chance to cover or mention today, like I say, please reach out to myself or my team, and we would be more than happy to help. CQG certainly can help you as well, or they'll at least get you pointed in our direction. And we'd also be happy to welcome you on future webinars, future training calls, so that you have an idea to learn what the DeMark indicators are all about, and maybe to give the DeMark service for CQG a try. So if there are any other last-minute questions, I'm happy to take one more. And otherwise, I know it's getting to the end of the day, and I'd like to thank everybody for joining us on a day at the end of August when I'm sure plenty of people would otherwise rather be out enjoying the nice summer weather, or out at the beach or Hamptons or wherever you might be. I'm not seeing anything come in here at the last minute. There's been a lot of great questions, so I'd like to thank everybody for taking the time with us today. Like I say, please reach out to us, at sales@demark.com, myself, squimby@demark.com, or get started with the DeMark service for CQG. Talk to your rep at CQG, and then just let us know how we can help in terms of getting you up to speed, and we'll look forward to welcoming you on board.
Hi, everyone. Thanks. Sorry, I was having some technical issues. Thank you, Stephen, for everything. And the recording will be sent out tomorrow. And that's about it.
Thanks, Allison.
Thanks, Stephen. Everyone have a good night.